This week on Wealth Track, how to get financial planning advice at a reasonable cost. Cheryl Garrett and her national network of financial planners offer their services on an hourly basis. Financial advisor and planner Mark Cortazzo has created flat fee portfolios. Find out more about financial advice for small fry next on Consuelo Mack Wealth Track.
The company you keep is also the company we keep. Together we help provide a lifetime of guaranteed income and investment solutions.
Additional funding provided by Loomis Sales, investors seeking exceptional opportunities globally, and Wintergreen, your home for global value.
Hello and welcome to this Christmas weekend edition of Wealth Track. I'm Consuelo Mack. We have a present for all of you this holiday weekend, some unusual financial planning options for middle-income investors. Now, all of us could use financial advice in this complex, downright scary world we live in. Most wealthy families have entree to the best brains money can buy to manage their investments and provide financial planning. But what about the middle class? Where can they turn? According to the research firm Cerulli Associates, more than 80% of financial planners define their core market as clients with investable assets of more than $250,000. Half of those advisors focused on clients with more than $1 million. Another study by Price Metrics, a wealth management consulting firm, reported that a quarter of those advisors who manage accounts for households with $250,000 to $500,000 in assets charge their clients fees of 1.75% or more on the assets they oversee. Now, free financial advice is available from banks, insurance companies, brokerage houses, and mutual funds, but much of this advice is sales-related from advisors who work on commissions. So where can small fry get good, unbiased advice for modest fees? This week's guests offer two possibilities. The Garrett Planning Network, based in the suburbs of Kansas City, founded by financial planner Cheryl Garrett, offers financial advice on an hourly basis as opposed to most financial planners who charge a percentage fee based on assets under management. According to Garrett, most people don't need ongoing financial planning and investment management. And according to another Cerulli Associates survey, investors would rather pay commissions for financial advice they receive than a fee based on assets under management. Now, many members of the more than 300-strong nationwide Garrett Planning Network offer 2-hour in-person planning sessions that typically cost from $400 to $600. Their hourly fees range from $180 to $240. Another entrant into the financial planning for the middle class arena is flat fee portfolios, recently introduced by Mark Cortazzo, head of Macro Consulting Group, an award-winning advisor to high net worth clients in Parsippany, New Jersey, and a frequent guest on Wealth Track. His flat fee portfolios are aimed at people who don't need complex financial planning advice, just investing help at a reasonable price. For a monthly fee of $199 for accounts of $250,000 or more, or $129 a month for smaller accounts, a client gets to choose a model portfolio based on his or her needs, a dedicated advisor, and periodic portfolio reviews. According to Cortazzo, as this chart shows, over a 10-year period, this flat fee, bare-bones financial advice could save tens of thousands of dollars in fees and dramatically boost investment returns. In a recent interview, I asked Cheryl and Mark why they had departed from the traditional financial planning fee structure.
I was working at a wealth management partnership, and our minimum fee at that time for all clients was $4,000 a year. And, for many clients that was very appropriate, but we were getting phone calls from people that I couldn't serve, that I wanted to be able to work with, regular folk, like the folks that I grew up with, my neighbors, my friends. And I thought, why in the world can't financial planning, financial consultation advice be rendered on an hourly basis like most consultants work in this country? So I decided to charge by the hour.
Mark, what was the reason that you started the flat fee portfolio system?
Well, our traditional business works with very high net worth individuals, and they tend to have very complex planning needs. And we've had many referrals from our clients from their children or for neighbors that had smaller account sizes that didn't have complex planning needs. And it was a very natural extension to what we're doing for our high-end clients, modified version based on what we're doing for higher clients, but at a flat fee cost, a very transparent, very easy to understand pricing structure, which I don't think the middle market gets access to.
So why are you two pioneers? I mean, Cheryl, why haven't other financial planners done this? And also, why hasn't it really caught on? Because when I say you're pioneers, this is unusual for this kind of a service to be offered by financial planners.
It truly is unusual. I think part of it is this isn't where the big money is for financial advisors. But there's so much work to be done, so much good to be done, and you can make a professional living working with people, whether they're beginning, middle income, validators. There's a lot of do-it-yourselfers out there that would like a second opinion. They're willing to pay a professional for that kind of guidance.
And so how does the Garrett Planning Network work?
Wow, that's a big question.
Well, you have, 315 financial planners who are signed up who are willing to basically render their services on an hourly basis.
That's correct, yes. And I head up the network. It started out as kind of an offshoot of my individual practice. A lot of financial planners were approaching me saying, I really like the way you work with your clientele. Teach me what you're doing. How are you doing this and making a sustainable practice, a viable practice out of the way you're charging on an hourly basis? I love the concept, but I hear it can't be done.
I know you have retired from financial planning because you're running this in another educational organization, but so, how do you make this work financially? Mark wants to know.
Well, one of the things that we really have to recognize is that when you're a solo practitioner, a small planning firm, you really have to align yourself with like-minded individuals and pool your talents and resources and energies so that you can access the great talent like compliance consulting, legal experts, productivity experts, technology experts. So instead of each of us going out independently and securing those kinds of services that we would need to run a very effective practice, we come together as a group, share our ideas. We have a private intranet discussion board so we can talk about issues, of course not revealing client personal data, but we might talk about a specific client situation, say, here's what I'm thinking about how I'd handle this case. What am I missing? And then you've got 10, 30 responses of like-minded individuals saying, I'm coming at it from this angle and I might want to also suggest this, or, oh, Cheryl, you're doing a great job on this area, but have you thought about? So you're getting the collective wisdom of the group without the extra cost. So it enables solo entrepreneurs or small planning firms to really be able to bring a lot more talent to the table rather than having this large firm behind them.
And the hourly fees the range is?
Most typically between about $180 and $240 to $300 an hour, depending on the market you're in.
And Mark, I was kind of kidding when I said that because you do have a different model, and with the flat fee portfolio. And as you said earlier, and we know that you have a thriving business advising high net worth individuals at Macro Consulting. So it's given that, it's interesting that you've started this new service. So you told us what the motivation was, and how does it work, and how is it working?
It's working. We're getting a lot of interest in it. The conversion process is a slow one because it is a new concept. So we're educating people. We have over 50 different models for people to choose from. So making sure that they're in the right model. I think why this hasn't caught on or other people haven't done this is it's not profitable business if you had to run this standalone. We have 25 staff. We have 8 certified financial planners, 2 CFAs on staff. So we already have people doing trading. We have people doing performance reporting. We're already doing analytics on underlying investments for our multi-million-dollar clients. We've got the heavy lifting part done. Now it's just executing it in a little bit more uniform environment where we can bring this down to a more moderate level client. And I grew up in I'll round up and say average income household, and I know the quality of advice that they get and what they're paying for that. And it's at a much higher price point than what high net worth individuals get. And I think everyone should have access to good quality, unconflicted investment management.
So let me ask you about the flat fee, however. Tell us what your rate structure is and what you get for that annual fee.
The beauty of this is it's not just a web-based solution. You have a dedicated financial advisor who's a certified financial planner who has a decade, the person who's running this right now, a decade of experience as an advisor. So this is someone who knows your situation. You get the models built and managed for you. You have a semi-annual review with that advisor. They do an outreach and give you updates. You get quarterly performance reports, and it is a comprehensive solution for your investment management. It's not clicking on a box and here's a pie chart with a model. It's a traditional relationship that you would have with a financial advisor that's augmented with technology to make it run more efficiently. And we have two different levels. We have accounts that are over $250,000 are $199 a month, flat cost, regardless of what model you use or size. And then we have an emerging investor program, which is really nice for accounts under $250. It's only one review a year, but it's $129 a month, and a little bit scaled down versions of the models.
And so the $250 plus, is there a limit at which point?
At about $2 million. It's for these are for retail investors.
Who is the Garrett Planning Network appropriate for? Where I'm paying for hourly financial advice.
The three biggest groups I would say are beginners. People that are just saying, I have never sat down with a financial planning professional. What do I need to be doing?
Right.
Give me a pulse on where I'm at and what can I do to make my situation better.
And so that would
standing.
Typically take, what should you allocate for that? 2 hours, Cheryl, at a minimum, or?
Very likely it could be a 2-hour session. Mm-hmm. We do a lot of real-time planning sessions with people getting started, and if someone has a fairly straightforward, middle income or truly what we think of as a beginner, maybe in their 20s, 30s, maybe even 40s, their situation is probably pretty straightforward, and we can do a lot of good value in a couple of hours together. With 5 hours, we can cover a whole lot, and really we want to piece it out, and I focus. I only mention one of the groups. Beginners, middle income clients. This is a whole area that, for the most part, the financial services world, at least the fee-only part of the financial services world, has basically been unable to serve. And then the
unable and or unwilling to serve.
Exactly.
Right.
And then the third group is also a group that a lot of financial services professionals aren't interested in working with, and that's the do-it-yourselfer. And I actually very much enjoy the do-it-yourselfer because they're into the subject matter, they want the education, they're looking for a second opinion on how they're doing, or maybe they have another advisor and they'd like a second opinion on something else. Maybe they're working with flat fee portfolios or doing their own portfolio management, and there's some other areas in their personal financial life that they need to have some feedback on. So that's what we specialize on.
One of the interesting things that we saw with this is we're getting a lot of do-it-yourselfers reaching out to us that might have a larger portfolio, maybe have an $800,000 portfolio, and they've got some stocks that they like and some funds that they bought. Some of the great guests that you have on the show, they want to buy some of those investments, but they're hiring us to build the foundation, the core part of the portfolio. So maybe they give us $600,000 of it, and they tinker around with the things that are of interest to them with the $200,000. So they have a professional advisor and manager, and we're not doing financial planning. We're doing asset management. So we've had plenty of opportunities that people have reached out to us on the investment management side that had complex planning needs that we've called up Cheryl's group and have been able to refer them to someone who was able to talk to them about some of the debt issues and insurance issues that we don't do at flat fee portfolios. It's asset management. Many firms bake into the cake financial planning and asset management. They're two different functions, and I think that if you break those down into their two different functions and pay for what you use, you can really get a great value.
Yeah, I completely agree.
Yeah. So who is the traditional structure appropriate for? So if a client came to you and asked for your advice, who shouldn't be using this hourly financial planning service that you offer, Cheryl?
Probably the most cost-effective solution for someone who needs to delegate all of their affairs to a professional and say, you take care of this for me, would be a retainer. Pay someone an annual fee to do whatever it is that you need to have handled rather than an hourly fee. So an hourly fee works very well if you are more self-directed, if you're willing to do some legwork, but you need some professional guidance in certain areas or maybe a full overview periodically. But if you need ongoing continual advice, a retainer makes probably more sense.
Well, and let me ask you each about the fees that are charged. How transparent should we ask our financial advisors to be?
I think that sometimes you're getting things in addition to asset management for that fee, but you have some people who have complex planning needs that might be getting a good deal, and some people have more simplistic needs that are subsidizing those other. And the financial advisor might not know going in how complicated, right. And so they mark it up. And if you're less maintenance and less complicated, then you're just more profitable for them. I think, having a clear, know exactly what you're paying and understanding what you're getting for that. I think one of the things people have come to us with is they see how much the asset management piece should cost. They can compare it to what they're currently paying and see if the added value that they're getting is worth the incremental cost, and at least make an educated decision. We're not going to be the best solution for everyone. Cheryl's group's not going to be the best solution for everyone. I think it's people understanding what they're getting and what they're paying for it, so they can see, is it a good value for their individual situation? Is all the message both of us are trying to get out is, do you know what you're paying, and is it reasonable?
I'd like to add on to that, if I might. When, we were talking about the 1.5%, and you're getting a comprehensive financial plan and money management. That may be very appropriate for certain people. Oftentimes, the first year is when the overwhelming majority of the labor is involved.
The work is done.
But the fee doesn't change in subsequent years. And so, keeping that client on for many, many years is where the huge profit opportunity is for the advisor. But the client's overpaying for the value that they're getting for that relationship.
And the financial planning advice that you get can be very conflicted. So if you have a $500,000 portfolio with me, and we're charging you 1.5% a year, and you call me up and say, Mark, I'm thinking about paying off my mortgage, I have a $100,000 balance, what do you think? Well, if I say yes, Consuelo, pay off your mortgage, that's going to cost me $1,500 a year for the rest of our relationship.
It's taking the money away from you.
That's an asset-based pricing. If it's a flat fee relationship, whether it's a $400,000 account or a $500,000 account, it's the same flat fee. We can give you purer advice. If you're paying somebody an hourly fee to do that analysis, they can look at the tax benefits and what your expected rate of return is, and at least give you we may both come to the same conclusion. The person who's charging you 1.5% and what we do or what Cheryl's group does, we all may come to the same conclusion. But you know that the basis behind that conclusion was purer with our type of execution versus somebody who's getting paid a percentage of assets under management.
I had a situation where an individual had read a quote that I said about a defined benefit plan, and I had recommended or suggested that most average Americans would be best served by taking their monthly pension paycheck from their defined benefit pension plan rather than the lump sum distribution that might be available or is available. And he said, are you kidding? Is this really what you feel like? He's a securities attorney and works on situations where an advisor has provided inappropriate advice.
Right.
And he wanted to find out what I really felt about that issue after that quote. He said, you're the first advisor I've ever heard of that said that people would be typically best served by, I'm talking typical Americans, would be best served taking their monthly pension paycheck rather than that lump sum distribution.
And the reason is?
I'm probably the only one you ever met that gets paid regardless of what the activity is, so I'm going to make the recommendation based on what I think is right for the individual. Most other advisors only get paid if that distribution comes out. Makes a huge difference.
So let's get to the one investment. Cheryl Garrett, what would you recommend? What's the one thing that we either all should do on a regular basis from a financial planning perspective, or that we should have in our portfolio, however you want to answer that?
If I had one thing, I would want everyone to have an annual financial physical. Whether they do it themselves, whether they work with a professional, but sit down and spend a concerted effort reviewing your finances, the whole thing, on an annual basis at least. and we're going to be so much better off as a society.
And is that something that you could also do with your accountant or your estate planning lawyer, or is you're talking about something
I want a
even
comprehensive
more
review.
All right.
You know, looking at your debt, your cash flow, your tax situation. Are you saving enough for retirement? Are you invested in the right places? How's your asset allocation? How's the family? What kind of things are going on with you? So looking at a certified financial planner to get a very holistic view of what's going on in your life and get a good update. Make sure that we're not missing anything that could completely throw the whole financial plan and your future off the rail.
And that sounds like that needs some educated questions as well, so which is your point. Mark, what would yours be? What's the one investment?
Well, to build off of that, I'm also going to give a homework assignment instead of an investment idea, and that is to review the fees that you're paying. If you're working with a financial advisor, it's well within your right to ask them to disclose for you in dollars. What am I paying in expenses on the underlying funds that I'm in, and what am I paying you on an annual basis for that investment advice, and have them calculate it in terms of dollars. So you can see, I'm paying $6,000 a year for someone to build this model and rebalance it for me and meet with me once a year. Is that a good value? So just assess where you are, look at the cost, not only hard dollar costs, but the underlying cost. It's in calculate it so you can look dollars to dollars, and I think that it would be a very surprising exercise for many people, and the Division of Labor is going to start requiring this next year on 401ks.
401ks.
You're going to see a statement that sees exactly what you're paying in dollars for the money that's being managed in your 401k, and I think that's going to be a very eye-opening experience for people that will cause them to question other investment strategies that they're employing.
So, you know, it's very interesting. So there's going to be a sticker shock on our 401ks when we see, and that's, so instead of the 1.5% on my assets,
right,
you're going to see they can actually break out all of the fees that are in every mutual fund that you invest in. The actual dollars.
Yes.
And so my question to each of you, you know, in the financial planning industry is, but do we have anything to compare it to? So we might be shocked that we're paying $7,000 a year or whatever it is, but does that necessarily mean that we're paying too much? I mean, you know, what do we have? What's the context?
If you come to a firm like ours, or you go to any other financial advisor, you can see what are their total costs going to be, and you can do a side-by-side comparison. Maybe there's additional value adds or services that you're getting for that higher fee, and that's wonderful. For some people, a Honda Accord is going to be a great, reliable, great value, and for some people, they want an S-Class, you know, Mercedes or something because it meets their needs. But it's, are you getting what you're paying for? And it gives you a basis to compare on an apples-to-apples situation.
Yeah, I think one of the major reasons why we don't have more practitioners working on an hourly basis or charging flat fees or project fees is because it's really painful to write a check to pay for this fee. I mean, $199 a month is real money, but some, you know, 0.0 something percent seems like virtually nothing. Right. But you apply that to a large portfolio and it could be multi times whatever we're talking about on an hourly basis. We really need to convert them into real dollars so real people can deal with, you know, what am I talking about here, and be able to evaluate whether or not they're getting what they feel is value for the money spent.
Yeah, we saw someone who got a proposal sent to them that was describing the fee as a 0.375% per quarter of their assets under management. So
sounds really cheap.
Really low.
That's a 1.5% a year fee, which is triple what it would be for a program like ours. But as a fraction of 1% per quarter, it sounds like a very, very inexpensive proposition. And I think showing in dollar terms, it's very easy to compare. Yeah. You don't have to do any math. Just look at the numbers, which one's bigger.
Transparency. Well, thank you both so much for being on Wealth Track and for being the pioneers that you are and offering these really, you know, low-cost, reasonable choices to Middle America, because there is a real dearth of these services and we desperately need them. So thank you both very much for doing it.
Thank you.
Cheryl
Garrett and Mark Cortazzo, it's always lovely to have you on Wealth Track.
Thank you.
Thank you.
At the conclusion of every Wealth Track, we give you one suggestion to help you build and protect your wealth over the long term. We've just been talking about the need ordinary folks have for low fees for financial advice. The same holds true for investing in mutual funds and ETFs. This week's action point: with few exceptions, choose low fee and low turnover funds. Former guest Burton Malkiel of Princeton and Vanguard founder Jack Bogle have been preaching this gospel for decades for a reason. There is a body of research that shows that fees are the one sure long-term predictor of fund performance. Higher fees really take their toll on performance over time. Next week, we'll sit down with one of the very few professional money managers who truly understood how weak the global economy would be and how strongly U.S. Treasury bonds would perform as a result. Robert Kessler has made money with minimum risk for his clients over the last decade. He'll tell us why he is still a believer. Now, for those of you who want to see our Wealth Track interviews ahead of the pack, we have a new opportunity for you. Subscribers can now see our program 48 hours in advance on our website, along with timely interviews exclusive to Wealth Track web subscribers. To sign up, go to our website, wealthtrack.com. Thank you for watching. Have a wonderful Christmas holiday with your loved ones, and make the week ahead a profitable and a productive one.
Additional funding provided by Loomis Sales, investors seeking exceptional opportunities globally, and Wintergreen, your home for global value.